Welcome back to the ICO Alert Corporate to Crypto Podcast. I'm your main man, your host, Ryan Dennis. I have two very special guests today. Let me tell you, this is a treat, okay? Number one, you got another member of the ICO Alert team, Global Sales Lead, Dimitry Chesnokov. What's up, Dimitry?
How's everybody doing? Thanks for having me here.
Dude, it's a dream come true to have you. And his old friend and another corporate to crypto genius for getting into this industry, Zach Lee. What's up, Zach?
Hello. Thanks for having me here.
Absolutely. So I got to know Dimitry because we both started at ICO Alert at the very same time. But it's kind of like when you're twins, but one is like a minute older because I'm a day older than...
Oh my God, you're going to bring this up, yes.
I've been at ICO Alert one day longer than Dimitry, but definitely one of my closest buddies now living in Pittsburgh. We grew up like learning Pittsburgh together. So 2018 has been a wild ride for both of us, I would say. Many conferences.
It's been great. And we had many talks in the office about crypto market and overall and switching from corporate to crypto. And when you first told me that you were doing this podcast, I was excited and I'm finally here. So, let's do this.
Yeah, it's kind of a big deal. But the biggest part about it is like I think you and I both felt a shift in our lives, things getting kind of better. So, and Zach is here because he goes way back with Dimitry, right? You've known Dimitry for quite a while, right?
How long have we known each other?
Oh, it's been many years, yeah.
Almost 10, I would say. Close
yeah.
to it.
10 years?
Close to it. I'd probably say 8 to 10.
Yeah.
All right, so you gotta give me a rewind. What was it like when you met Dimitry?
Well, so I met Dimitry when he was there before I was, back when we were working and trading. And I showed up the first day. I had a mohawk coming into the office. And everyone looked at me all weird. And then this Russian guy came out of nowhere and says, "Hey, what's up, man?" And we just kind of talked it off and found out we were very similar in how we think, especially from a trading perspective. And we just clicked it from there. And then we went through a couple of ventures together as well.
Yep.
Got into a crypto startup together while we were there. And our roads kind of diverted for a while. We both left Wall Street. And Next thing I know, we were both back in crypto.
Wow. So you guys worked on Wall Street together, right?
Yep.
Okay, so what was this company? What were you guys, you don't have to tell me the company name, but like what were you guys doing?
Sure. So we worked for one of the biggest Forex brokers on Wall Street and overall in the world. And we started out working with retail clients to help them trade Forex. We would onboard them, we would help them get educated in the market and place trades, make sure the trades go through. Basically, a customer service position, working with existing clients that are in FX. From there, we moved on to bigger roles where we started working with hedge funds, institutions, corporate players, and where we actually help them establish hedging positions, do massive liquidations. Did you want to add something?
No, that was pretty much it. When we ultimately moved into institutional, what we worked with was a wide variety of hedgers, high net worth individuals. From me, on my side, I was managing around 32 billion in trading volume a year. And a large portion of the job involved boarding clients and then managing block trades. Sometimes when a lot of people don't realize that you can't just hit buy on a market order, right? So there's a lot of things that goes in it. And through that process, we were able to learn trading from a sell side. And I think a lot of people tend to forget that there's two sides to the game. There's buy side and sell side. And being on sell side lets you understand liquidity, lets you understand the market, the foundation of the market, and also how price moves as well. Volume dictates price. And I think that's one of the biggest things that we just have to stress that most retail traders don't understand. For them, it's price dictates volume. You see it shoot up and then you buy, but that's usually too late. The move has already occurred.
Wow. Okay. So I already just learned a lot about price fluctuation right there. So for people who are not really familiar with trading Forex, the trading cryptocurrency and all that kind of stuff, but in general, cryptocurrencies, ICOs, it's the world of investing, right? It's pretty much, they're all a family. It's all in the same industry, right? So I'd love to hear, Dimitry, how you got into first of all, investing, and if you could kind of just sail me through how you ended up in crypto, of all things.
Yeah. So my story started at Rider University. It's a small school in New Jersey. And I studied finance, got into global economics. That was my passion. I really loved capital flow and watching how overall economies interact with each other in terms of trade and so on. And right after college, I got picked up by this Forex broker and started my career there. It was a natural move for me because it involves macroeconomics. I deal with capital flow. I see how countries, companies trade with each other based on currency fluctuations, interest rates, central banks. So that got me into kind of more of the global economics, and I've enjoyed myself there. So what happened was eventually I've started to notice that a lot of currencies were being manipulated for the country's interest or company's interests. Not to get too deep into this, but central banks would essentially manipulate the interest rate to bring the currency down for better competitive trading opportunities.
You wrote an article about that.
Yes, absolutely, yeah. And so what I've noticed is that actually what happened at one point, actually it was 2015 in January, one of the biggest banks, which is Swiss National Bank, SNB, they had their Swiss franc pegged to the euro currency. And the reason why they had it pegged is because they had some certain benefits for trade between Europe, Switzerland, and some good things aligned with it, with that structure. But the problem was that it was not sustainable, and kind of everybody knew this, but everybody believed in the bank, that they have enough money to be able to support this peg where every time, they support a specific floor where the exchange rate for Swiss franc is not going to fall below a certain amount. Now, when you're talking about Forex market, it's the biggest, most liquid market out there. When you're comparing it to crypto, you have to keep that in mind. But what has happened in 2015 in January, the Swiss National Bank, after so many times saying that they will support this floor, they will keep up with the current structure, one night decided that they're not going to do it. So they basically just outright came out and said that we're no longer supporting this peg, and the markets went crazy. Billions of dollars were wiped out in just seconds. Liquidity providers, major banks did not know how to price this, Swiss franc against euro or some of the other major currencies, which caused a huge ripple effect in the market. It pushed out a lot of companies to bankruptcy, basically. And my company as well suffered a lot. They lost, I believe, close to 250 million just overnight in that single event. So that made me think, that whole event made me think that, we're living in this time when we're trusting these banks as centralized entities to be able to deliver on their goals or on their rhetoric that they're saying, what they're going to do, and you trust them. But what actually ends up happening is that they protect their own interests, and out of nowhere we have something disruptive like that happens, which completely destroys the trust of that central entity and causes a lot of damage to the economy. So after that happened, that actually pushed me back into crypto, and I started researching that more because that became like a reasonable alternative to all this mess that's going on right now in finance.
Did you say crypto is a reasonable alternative?
I said at a time I was still kind of dabbling with it, so I thought it was a reasonable alternative, and I got into it, and a lot of people were seeing this market as kind of chasing the price, trying to make a quick buck, and off the quick price movement and hype. But I was more fascinated with the technology and what it can really do for the economy, for just the lifestyle, for everything, for people. So I was doing a lot of research for that, and I went down the rabbit hole real fast. And I've left the job on Wall Street and started pursuing other opportunities. And that's how I ended up at ICO Alert, where I just enjoy, being part of this industry, shaping it, being a thought leader as ICO Alert.
Yeah, you're actually in a position now where instead of actually being subject to something like a peg and the ripple effect of it,
right,
you're actually kind of controlling the way that businesses are operating more conscientiously, because we have a lot of responsibility at ICO Alert to kind of watch the ICO market. When we go to conferences, and Dimitry would tell you the same thing, people know who we are, and our brand is whatever their opinion of ICOs is.
Yep.
Right? So if they're bullish on ICOs and think that the birth of new cryptocurrencies is important to push, the quality of other cryptocurrencies to go up, then you think we're a cool company. If you think all ICOs are a scam, then you're like questioning what we're doing. But I think anybody who understands the kind of work we're doing or why you would even move to ICO Alert, it kind of raises a question. So, I mean, that's really interesting how you were kind of, I don't know, like a victim in a way, right? Like everybody else was. What year was that when the peg changed?
That was 2015 January, and
That's when I joined crypto. So
let me tell you more about this. Actually, I had to talk to so many clients that lost a lot of money on this. And just to kind of put it in perspective, Forex market is 50-to-1 leverage. Now that might seem kind of like a lot, but you have to think about that Forex market overall, like currencies move, let's say 0.5% a day. So it's really not that much. So leverage is used there to kind of be able to
chase the yield.
Exactly, yeah. So if you were leveraged in that position 4-to-1 or more than that, you were completely wiped out. Most people actually had negative balances because of the leverage. And it comes down to this, because they were trusting the Swiss National Bank because it's a central bank, has a lot of respect that they're going to, in fact, keep this going. And that's why people were highly leveraged on this. But unfortunately, they found out that something like this can happen and they can lose everything. So I've talked to, it was a rough day when that happened. I've talked to many clients that lost a lot of money. They were really upset. And yeah,
death threats.
Yeah. So no, not like that, but it was tough. I lost some money that day too, but it basically again brings me back to why I started getting into crypto, seriously.
Yeah. So when you're looking at the industry now for cryptocurrency versus like those traditional markets, a lot of people would say that the point of cryptocurrency, or the birth of Bitcoin at least, was to kind of avoid some of those central banking issues like double spend. And that's sort of like the vague overarching thing that everybody kind of says. But you have a very specific instance of banking actually not being as fruitful of an opportunity for people on a certain day of events as even something as volatile as cryptocurrency or ICOs could be. So, I mean, that's a really nuanced story, but it kind of shares how even people in the industry who had clients and a reputation and a name are, they're like, the banks are savage to you too. You don't know what decisions happened with that beforehand, but clearly you're subject to, you're playing a victim, actually.
And that industry was heavily regulated at that time as well. So there was oversight on this. And what ended up happening, the regulations became stricter and stricter, where they try to prevent you can't really prevent an event like that, but they increased regulations where they protect the retail traders and certain traders from being able to leverage or being able to trade because of the way the market became, essentially.
Wow. So Zach, you're very familiar with regulations too. I mean, I'd love to hear a little bit about how you got into cryptocurrency, but like, kind of give me your story and talk about how that event may have or may have not affected you and your decision to get into crypto.
Sure. So I was in crypto back when I was in college, when it was just very new, very early concept white paper. I was a finance and risk management major. And one of the things that kind of drew me to crypto at the time was this whole fight the system. It was so different from what was out there, so different from what we were being educated, that it just really appealed to me. After college, I went into trading as well, like Dimitry. And through SMB, I saw the same thing that Dimitry saw. My book of business was relatively large compared to the rest of the company, so I saw the biggest hit coming from my clients. And it was just really shocking to see how fast wealth can be destroyed, even in a very regulated market. So that kind of gave me a very sour taste in my life, because realistically, I looked at where I was and I didn't really see any value in what I was doing. All I saw was just people coming in. I saw fund managers coming in, taking risky bets, and ultimately they just get burned by the central bank, by the system. So that was when I left corporate. I went into startup. I did a couple of startup companies, and ultimately I came back to crypto. When I came back into crypto, it was when we started to see the beginning stages of a bull run. And through that process, I realized that crypto, it's unique in the fact that for the first time, you have the combination of technology and finance rolled into one. So if you think of the overall vision that we have for this technology in this market is that we're trying to create a tokenized world, right? And in order for that to happen, there's a lot of pieces of finance that still has to be incorporated in it. When I was first appealed to crypto, I was in this mentality that we're going to shake the system, we're going to destroy the system, but realistically, we're not. All that we can really do here is that we need to transfer this technology over to the existing system. You know, if you ask people what Bitcoin was and why Bitcoin was so powerful and why blockchain was so powerful 4 or 5 years ago, they'll tell you that it's anonymous, it's untraceable, it's a way for you to really break the system. But if you look at what blockchain is today, and the reason why I believe this technology is here to stay is just the exact opposite. It's the transparency of it. Because at the end of the day, all blockchain is it's a ledger, it's a distributed ledger. It's an improvement upon the system that was created hundreds of years ago. And that in itself is what's going to make this technology one of the main paradigm shifts of our generation, is that you're able to streamline operation, you're able to streamline accounting, logistics, and all of these factors that are key components for companies to operate. So in addition to that, the other side that really brought me back was that in order for this market to succeed, you have to slowly build the foundation for corporate finance to come in. We're not going to destroy the banks. And it's very clear that the banks are not going to fight this. They're going to come on. But one of the reasons why they're reluctant to come on is the fact that the infrastructure is not there. So my drive for getting back into crypto, and I think it's similar for Dimitry, is that we have sell-side experience. We know what the structure is. We know how trading operates. We know how finance operates.
Absolutely.
And what we can add value to this market is that we can help clean it up. Because you look at last year, you look at 2017, it's an amazing bull run, but that bull run is really, it's not realistic. It's mostly just a massive pump on the retail side. For the first time, you have institutions coming in starting 2018. You have a large scale adoption of it. And what you're seeing right now and where you're seeing the banks coming in is that they're trying to build the liquidity pool. They're trying to build the foundation. And it's guys like us who are there that can really help that, because we have an overlapping skill set. We know crypto, and we also know the traditional banking system. And that's where we can really add value to it.
Yeah, and I was going to just add to that. Right now, just recently, we saw an announcement from Coinbase that they released the custody, right? The platform, which is huge for institutions. They were waiting for that to happen, for some kind of a legit custody platform, which can be used, which is something that's used in traditional finance.
Right. So as a fund, when you get to a certain size, you have to custodial your funds. It's just a trust factor. Regulations, custody, and trading are the three main components that this industry needs right now.
Yep.
Yeah, I've discussed in the past with on a prior episode when I was talking to Todd White, who is a lobbyist in DC and works with the SEC pretty closely and does governance strategies for cryptocurrency companies. We talked about that custody piece even offline because it's really huge. And so we were talking about 5 years in the future, some people have this opinion that you can use your, any kind of cryptocurrency you can think of, just 5 of those coins and buy a coffee, right? And it'll be fine. But in reality, it may be a situation where you need a Schwab account, like a Charles Schwab account, and then they actually use that account to pay for your Starbucks, right? So Charles Schwab would be the custodian. So when we're talking about how, crypto, everybody talks about crypto like it needs to get adopted by the banking industry or vice versa. But you guys are talking about how it's on both ends. We need infrastructure. So you guys are actually working in the industry to build that, like you said, liquidity pool so that cryptocurrency companies have the network ready, they have the infrastructure there so that banking entities would be interested in participating. And the banking side, what responsibilities do they have? And if we give them too much responsibility, aren't they going to take too much advantage of, the crypto industry and crypto people? Because if they hold sway over what we're doing, I know Coinbase custody is a great nuance because they're attracting a lot of institutional investors to the space. What would be the consequences of that that a lot of people may not be thinking about now that you may have thought of or experienced in your experience with Forex or?
So when we think about the main risk of having banks and having institutions come into this space is the fact that they're able to maintain a large control over it, right? I think that in the end, it's something that you really can't fight. I think it's impossible to prevent a large player to make moves in the market. I think that's just the natural way of the market works. The only way for you to prevent a large institution from coming in and really holding a massive amount of sway is the fact that either there are other institutions in there who can combat that, which is what we somewhat see in the market right now, or there's regulations that are in place to control that. And that's why regulations is so key for this industry for us. The other side of it is that at the end of the day, cryptocurrency in itself is still decentralized to an extent. And as long as we can maintain that, as long as we don't outright give the banks everything, then we still have a certain amount of sway in the system, a certain amount of level. It's not the best situation, but it's better than what's out there right now. Because when you look at current monetary policies, you are confined purely by the interests of central banks, and the interests of central banks, for the most part, align with the interests of big corporate. All that we can really do is we can alleviate some of that. But to think that we can remove that, in my opinion, is a very idealistic approach to it, a very naive way to approach the system.
So I want to ask you, Dimitry, because some people think that cryptocurrency and banking, or like cryptocurrency gaining that kind of popularity and the regulation to where it's like official and it's everywhere. Some people call it the waterfall. There are some good, like I said, like positives and negatives. When you're trading at higher volumes, it kind of gives sway to those institutional investors, to those whales, yep. Right? So if you're a retail investor, when you're looking at the industry now, what is there to be hopeful about, right? Because you're kind of looking at like the price is the highest that it can go. I know Zach mentioned to me, we were talking before, and you said that the 20K Bitcoin is that's like the best retail investors can do, right? And like now it's kind of moving into like those big whales. Where do you think we're going to go next? I mean, if you kind of had to look at things, and I'm going to ask you too, like Zach, like where do you think the market is now, and how much is due to the institutional investors versus the retail investors, and what do those retail investors have to look forward to? A lot of ICO traders, right?
Absolutely, yeah. So it's a great question because right now, if you take a look at prices and if you look at historic prices, since we had pretty much majority of retail pumping those prices, you can't really justify those numbers, those prices that were artificially inflated by low liquidity, low volume, and retail investors. Right now, as we're at initial stages of having institutions coming in and institutional traders, we are actually coming closer and closer to price discovery, more liquidity in the market. But really, for retail traders and overall cryptocurrency community, what they should be looking forward to is the actual delivery of technology and the impact of that on the overall crypto community. So when I look at projects at ICOs or those projects that have already finished ICO, I'm looking at their roadmap and see are they actually delivering what they promised? How are they gaining traction? Are they actually fixing this the problem that they mentioned on their ICO website? All of those things will make the difference. Now, also, it is important to keep in mind that there are so many ambitious projects out there that are in somewhat similar category. A good amount of them will not succeed. And this is something that Zach can talk about a little bit more in terms of the .com bubble, how that happened. And it looks like the crypto is taking kind of a similar approach, right, Zach? We were talking about this the other day.
About the industry?
The industry and
the
how...
purge.
And yeah, exactly, the purge, yep.
Yeah, the purge. So first off, I think the purge is necessary. I think a lot of people...
Hold on, define the purge. I want to be in on it. What is the purge?
The purge is the shakeout of retail traders. So if you look at the market for 2017, 2016, most of that pump comes from early stage institutional, but also mostly from retail investors as well. You have all the shills coming on Twitter and all the social media pushing that.
John McAfee.
Right, McAfee. Right?
McAfee, yeah.
Right. So what that does is it's very toxic to the community because you set a very unrealistic expectations. In my opinion, I think the days of getting 20x on an ICO in the first month is gone because that's unrealistic. And second off, everyone that looks at crypto and you get into an ICO and you're expecting 10x, 20x, and it starts to sit sideways or something, your first reaction is to dump that and try to chase yield somewhere else. So what it does is it creates a market that's just nothing but pump and dump. So it's either someone holding the bag or someone getting rich. That's not a very conducive environment for the average retail investor. What you really want is you want a steady growth, you want a steady climb within the market. The second thing is you look at the dot-com bubble, you saw this massive inflow of capital and you saw all of these companies coming in and pretty much blowing up overnight. And then you saw most of them washing out. So for me, when I look at investment in the cryptocurrency market and how I manage my fund is that we're indexed in the fact that we just want to target the large cap. We want to target the main nets. And the logic behind that is if you look at the tech bubble, yes, most of the things wash out, but from the tech bubble, you have Amazon, you have Google, you have all these large caps that still remain. So it's hard to predict what's going to last and what's not. And a lot of people, when they're in there trying to chase the yields, they end up just holding the bags realistically. The second side of it is that when you shake out the purge and you get the toxic out, you start to build a platform that's very inducive for institutional investor, which is something that's steady. If you were to go to any type of fund manager and you say, I can get you 1,000% in a month, they're going to look at you like it's a scam. I'm just serious. Look at the stock market. Look at how the stock market.
That's absolutely true.
We had a bull run and it was nowhere close to what cryptocurrency is, right? So in order for you to get that form of money, that real wealth that coming in, wealth management, you have to have a platform that is stable, and you can have volatility, but you can't have things shooting up 1,000% a day. That's just too much risk for someone who's managing wealth to be in. And that's why when you look right now, you start to see that there is this emergence in stable coins and anchors, is that they provide a form of stability within the market, is that when you look at traditional market, you have the equities market, which is generally a yield-seeking market. And then after that, you go into bonds, and then you go into commodities, and ultimately you go into currency. In our market, all you really have is altcoins, and you have base, which is Ether and Bitcoin. And those are the two on-ramps to fiat. So when you get any type of risk aversion in the market, say if you're holding EOS or Cardano or NEO, you have to dump to Ether or Bitcoin and then dump to dollars. So what that does is just creates a very heavy panic sell. And in order for this market to be stabilized, you need things like anchors such as Tether or Trust Token. Tether is a whole different story, and
let's not get into that one.
Let's not get into that one. I'm not. I understand it's a game theory, but what you need is some form for the fund managers, for the institutions, where if they were to invest in a yield asset, they need to be able to liquidate back to hard currency without having to go through multiple mediums and cause a collapse in the market.
Nice. Well, we're going to take a quick break, and when I come back, I'm going to ask these intelligent gentlemen if they'd rather have a community and a network or a working product in a new cryptocurrency, and where the future of ICOs lie. We'll be right back.
ICO Alert maintains the only trusted comprehensive list of pre-ICOs and initial coin offerings. This Pittsburgh-based startup has grown to serve over 1 million users in less than a year. But how did it get started? Well, at first, the company was just an online tool for two brothers, Mike and Rob Finch, to keep a calendar of their favorite ICOs. After just a few months, the team has grown to over 14 team members and produced hundreds of ICO reports. These in-depth reports feature exclusive interviews and offer insight into past, active, and future ICOs. Head on over to ICOalert.com, meet the team, and use their game-changing My Portfolio function. Track your favorite blockchain projects. Become your own venture capitalist. Only at ICOalert.com.
Okay, welcome back to Corporate to Crypto. I got my man Zach Lee and Dimitri here. Thank you so much for taking a listen. Really, really interested in the feedback of these guys and a couple questions I had catered for them specifically. Like I said, my first question would be really steeped in the potential of new projects in cryptocurrency, right? Because we talked a lot about macroeconomics and macro crypto and macro where the industry's going. So on a smaller level, right? Like you guys are two individuals trying to make a change in cryptocurrency to bring more positive change and basically bridging gap for cryptocurrency and institutional investors and things of that nature. So if I was starting my own cryptocurrency company or project, I see a lot of companies that have one or two of these, one or the other, right? Either they have a network and a community and hype, or they've got a working product, but sometimes neither, right? But for the sake of argument, which one would you guys rather start with and why? Let's start with you, Zach.
For me, I would rather start with a company that has a working product and a community. That just goes back to how I view ICOs and where I think it's going to go. I think the days of putting together a nice white paper and raising 20, 30 mil is gone. I think that now there's more money in the market, but the market is smarter now. And in order for you to really raise capital and be successful, you need to show a proof of concept. You need to go with private raising, whether it's seed money, VC, build that working proof of concept, and then go out and raise your money, whether that's via STO or an ICO. And then the other side of it is when you look at retail investors who are going into ICOs right now, I think a lot of people tend to be blindsided by the previous gains, and I think they don't do their research as much. They just look at what the community is pumping. And a lot of times the community can be bought. People can be manipulated in a way. When I look at an ICO, what I look at is this product viable? Is it truly disruptive? Because yes, the technology is disruptive, but when you're talking about viability, you need to look at what it's trying to disrupt. A lot of these projects have counterparts in their current existing world that they're trying to change. You need to look at the industry that they're trying to change, and is that industry already moving towards that progress? Because most people forget that there's two sides to blockchain. There's public and there's private. And IBM has been building Hyperledger, which is an amazing product for private blockchain. So some of these blockchain innovation and disruptive application can be applied to current existing business model under private blockchain. You don't have to issue a public token to do that. And so, yes, an idea might sound very new and very disruptive, and you want to get into it because everyone you know is trying to shill you on it. But think realistically, if you're trying to disrupt against a company that is currently operating right now, generating millions and millions of capital flow, and they're also investing in that same technology, but on a private ledger type, then the chances of the public ledger ICO with no working proof of concept and just a community is very unlikely to overtake that. That's not to say that you should disregard the community. I think the community is a very important factor in this industry, but it shouldn't be the determination for it. What makes me want to get into an ICO and a project is the proof of concept. Can this really work? And does it have the ability to replace what's currently out there?
Yeah, absolutely. I agree with everything he said. Just to add on more, so you can see a community of an ICO. Let's say they might have a community established, and let's say don't necessarily have a working product yet. It is important to take a look at the quality of the community. A lot of these, like Zach mentioned, retail traders, they hop into ICOs for bonuses to make 10x, 20x. I actually wrote an article about this where the title of the article is "Greed Blinds Crypto Traders," and that's really what happens where community members of a specific project, they focus on making gains and getting the 10x, 20x on what they put in. And that is really the key. The quality of the community, the quality of the people that the ICO attracts is something that I look at carefully. Is it a community of 30,000 on Telegram and you see only 3 people talking in the channel, that can raise an eyebrow. Even if they have a working product, how many users are actually going to use that product in that community? That's, that percentage is probably going to be really low. So it's very important to question the quality of the community when you see that, when you're evaluating ICOs, because what often happens is that after an ICO ends and they hit the exchange, there's a big dump that happens and the price of token falls, the community falls apart, and they go to a new project where they try to generate money, basically. So for ICOs, when I look at them, yes, it's very important to have a product, a proof of concept and the community, but the community quality has to be very good in order for that project to really succeed.
That's great. Okay, well, you guys both agree. I'll take the community. I want a bunch of shillers and space fillers. Shillbillies is what I want. I'm just kidding. No, but that's a really good answer. I mean, because you can get a community from a Rockstar product, but you might not be able to get a product off of a Rockstar community.
Exactly.
Right. Well, that's awesome. So just kind of a last question here for you guys. It's still kind of in the micro phase. What's the role of ICOs? Zach, I want to hear a little bit about the work you're doing on a day-to-day basis, because what you're really doing is looking at altcoins in general, right? And their role. But just talk to me about the nature of altcoins and the work you're doing, and what the role is of the ICOs who hope to get to the place where they're actually influencing the market you're touching, like the ICO's role in what you do.
So what I do, I manage a fund. I also consult for a few companies that are getting into the crypto realm. And the way that I see ICO and how I see ICO in the future is that it's to fill the final gap. I don't think that you should use ICO as your foundation for capital raising. I think that the way the market is going is that you'll go seed money, and then after seed money, you'll go private placement. And then ICO is to get you that last push to really get you out into the market. And that's where I try to convey to companies that are trying to get into this space, because you have so many companies that see last year, and in their mind, they say, we have a great product, we have a great concept, let's go out there and get 50 mil and then we'll build it. I don't think that's realistic. I think those days are gone. I think that for an investor as well, when you look at an ICO, you shouldn't be looking at getting 10 or 20x. Just because if you have seed capital coming in and you have private placement at the start, and your role in the ICO is to bridge the final gap, the yields aren't going to be there. But at the same time, though, you have more security within the product. It's not going to belly up, because there is institutional backing. There is a working proof of concept behind that. And I think that you might not get the yield you want, but you're also limiting your downside for that as well. And that's the biggest thing that I think this industry needs. And I think that for the average investors who are looking to get into ICO, it's good to be in an ICO, but that shouldn't be everything that you invest in. You need to have core foundation in large caps, such as Bitcoin, Ether, the main chain, right? The difference between the actual chain itself and the token. Don't put all your money in some brand new idea because you think it's going to 20x, because chances of that happening nowadays is slim, and you're more than likely going to lose 50% on that.
Thank you so much. We're out of time, but I want to say thank you so much for Dimitry and Zach Lee. Any parting words, Dimitry? Anything you got for the people out there?
No, it's been an absolute pleasure to be on this podcast, to share all the things that I went through and what got me into crypto, especially with my really good friend here from Wall Street. So it's been very enjoyable.
Sweet. Zach, you got anything for us?
No, thank you for having me on the show.
All right. As you can tell, these guys are really smart. If you got to rewind and hear this again, I don't blame you. I have to, because I want to make sure I digest everything here. Again, Dimitry Chesnokov, global sales lead with ICO Alert, and Zach Lee runs his own fund. And we'll be out. We'll have you back when you visit Pittsburgh again. How about that?
Sounds good.
Sweet. All right. Thank you, everybody, for listening. This has been another episode of Corporate to Crypto. Make sure you subscribe to ICO Alert, the only trusted comprehensive list of ICOs online. Beware of ratings. Be a learn-it-all, not a know-it-all, people. Have a great day.